This market just gave us another reminder of why patience pays. The indexes slid hard early in the week, leaders widened out, and then, right where institutions often defend, the 50-day moving average stepped in and caught the fall. It wasn't pretty, but it worked. Traders who responded stayed safe. Traders who predicted paid tuition. Welcome to Market Edge, ahead of the trade. Today we'll walk through what's really happening inside the ETFs, talk about how to handle this kind of volatility without getting shaken out, and then finish with a look at where leadership is quietly trying to show its hand inside the MAXLIST. Let's get started.
Let's take it from the top. Here's the Direxion Energy Bull. And you can see it's just basing right here on the weekly and the daily. There's a lot of overhead supply. It's pretty choppy here. You're not going to see a chart set up like this in any book saying, hey, this is a good buy. So what does that tell us? Be cautious with energy stocks. There we go. There's the IBD 50. Great proxy for good growth stocks in the market. Great trend right here. Rode this baby. Since then, it's gotten pretty choppy and sloppy. Look at this. Drops like a rock, runs up, drops like a rock. Reversal bar here. But you see these wide swings? That's indicative of high investor emotions, lack of conviction in staying with something. Oh, look, it's going up. Everything's great. Oh, gosh, I got to get out. Everything's great. Oh, I got to get out. Be careful with that. And again, that's the IBD 50. It's a great proxy for quality growth stocks. At this time, it just says be a little cautious. Gold miners still basing here. You see that base breakout right there on the weekly? That was bought, and it's still owned, and it's trending. We've sold some into strength. Support on the 50-day, but note the simple base breakouts here, right here on the weekly and here. And note the trend. That is how money is made with less hassle. And yes, we own this. We've sold some into strength. That's where we're at. Continue onward. GLD, same situation. Note the base breakout on the weekly here. Note the base breakout here. Same thing's true. There's the daily base breakout. Look at that. Pushing right through there. And there it is right there. 315, we'll call it 315 up to 400. That's good money. Key point for everybody. Note the trend of the 8 EMA, the yellow moving average line. I'm going to say this. I say this every weekend. Good trends pay more than all the decisions you'll make. There you go. Let's move on. Cybersecurity, pretty choppy right there. It tells me to be kind of cautious with cybersecurity. Until that shows some power, I'd leave it alone. It's whipping around back and forth. That's important to know. Areas to maybe look into buying stuff, areas to stay away from. Biotechnology has been really nice. Look at that trend here on the weekly. Look at the base breakouts. Look at the base breakout on that bar right there. Tell me people don't look at this stuff. Institutions, yeah, we look at it. Just basing here, take out that top line, be pretty good, and note the volume pickup. They voted. See this volume surge? That's what you're after. That corresponds right here, and it's just trending nicely. There you go. Is there anything to do with it? No, the trend is up. Just let it work. Saw some into strength. Online retail's lagging. Be careful with that. You see this? Dropping down here. That green line, as I stated, is the 50-day moving average. It's below there. If it's falling over a little bit, be cautious. Another one. Software technology got spanked. Look at that. Be careful with a lot of the software stocks. There we go. Medicine rallies up across these tops right here. Do something to help you. Love simple basis. And that's close enough right there. Rallies up. Big, great lesson here. Gaps up, runs up, takes out that line, and falls below it. Tells you, be careful. And since then, it's just pretty slopping around here. Medicine, until it starts showing some power, be careful with medical stocks. There we go. Midcap, lagging. iShares Midcap, you can see it's below the 50-day. Leave it alone. Midcap stocks. Aerospace and defense was leading, had a good run here. Dropping down here now. Needs to base through here a little bit on the 50-day and then take off again. Okay, but until then, be cautious with it. Lost some power. Home construction. There's nothing good going on here at this time. Stay away from home building stocks. S&P 500 growth fell pretty hard. Got to bounce off the 50-day. And notice this. It gapped down, it fell, and closed right at the highs on the daily bar. It found support, folks. They bought that. Big money bought that. Growth, S&P 500 growth. Look into some growth stocks. Now you're getting someplace. Small cap had a good reversal, but man, it's below the 50-day. Fell down here pretty hard. Be careful with small cap stocks. Real estate, there's nothing there. Leave the real estate alone. Transportation is just chopping around back and forth. Needs to show some life above here. But notice, you see the travel range on these bars? Back. Oh, look, it's going. They take it down. Oh, it's going up. They take it down. Back and forth. Lack of conviction. Until this tightens up and starts to lift, be careful with transportation stocks. Airlines, similar situation. Basing here needs to go across this line right here. Draw this to help you. And again, emission winners. This routine I'm sharing with you, I do this every day because, God, it takes a long time. Oh, I think doing this, it takes a good 4 minutes. But in that 4 minutes, we gain a better understanding of areas to look into for buying to make money and areas to avoid. Until this takes out this line, be careful with airlines. There we go. Bank stocks below the falling 50-day, nothing really happening there. Be careful with the bank stocks. Regional banking, nothing really happening there. Be careful with that. All right? You can just see, it's below the falling 50-day. Midcap. See how wide and loose these patterns are? Be cautious with that, folks. Oil services doesn't look too bad. Basing right here. Let me go back to this, by the way. This below the moving averages just needs to show some power above the 50-day. Just wanted to clarify that. My apologies. Continue onward. Oil services is basing. Looks pretty good on the weekly. Perhaps this will base out across these tops with volume. Could be a potential buy. There we go. Pharmaceuticals. Look at that nice long cup and handle here, folks. I'll draw this to help you. That's a weekly chart. That's a pretty good long base right there. Here's a shorter. This part right here corresponds with it right here on the daily. There we go. Take out these tops, but it needs volume. You're like, boy, it was really going here. There was no volume. There was no conviction buying there. Be cautious with that. Continue onwards. QLD, get a bounce off the 50-day, but overall, it's exhibited some weakness. We need to see some strength in there. The one saving grace is this. It bounced off the 50-day with a pickup in volume. That's good to see. QQQ, same situation, bouncing off the 50-day with volume. Retail it's basing, but man, look at the whip here. You get caught on the wrong side of that, and you got a problem, okay? There are tops across here. I'll draw this just as right there. And right here for retail. Kind of loose though, isn't it, folks? There's some travel range on those bars. That indicates high investor emotions. Just be a little cautious with retail until it shows some power. Continue onward. Cloud computing starts to lift up and gives it all right back. Until this tightens up and starts to lift up again, be careful with cloud computing. Silver, basing right here. Now that doesn't look too bad, does it? Going across this line right here. Yeah. Take out silver right there with volume. Tighter pattern. Steel rallies up, falls on heavy selling volume, bounces off the 21-day. It's a little loose here. It's not real tight. Be careful with that. Again, loose patterns indicate high investor emotions. You don't want to get caught in that. Steel doesn't look too bad here, bouncing off a 21 EMA. You see that? Maybe watch steel going forward. Ticker symbol is, of course, SLX. We're about done. Semiconductors. So notice what word have I used constantly in this video? Loose. The action's a little loose. It says just be a little cautious. That's all. Don't force it. Same thing's true with SOXL. Spiders had a good bounce here off the 50-day. That's nice to see. Perhaps this will be the start of a move. Institutions use that moving average, the 50-day simple, folks. I will tell you. You think I'm kidding? Boy, they sure used on the bounce here and the bounce here and the start of a move. So watch this and see. Actually, there was no bounce here this close near the lows. There was a bounce here. See that? Opens here, falls. closes near the highs. On this bar, closed near the lows. Just want to clarify that. But it gapped down, fell, and bounced off the rising 50-day. Could be the start of a lift. I'm not saying it is. Price and volume will guide us on Monday or Tuesday. SSO, same situation. Solar stocks are still acting pretty good. Notice this. Up on heavy volume, reverses down on less volume, up on heavy volume. There's support right there. It's a little loose, though, so be careful with that. You like tighter patterns. You know why I like them? It indicates the emotions of the investors are calm, and there's conviction with staying with it. It's not whipping all over the place. They're not panicking out of it. I like that. TNA, on the other hand, woo, look at this. Oh, it's going, it's going. Oh, maybe it's not. Oh, it's going, it's going. Oh, maybe it's not. You don't want to get caught on the wrong side with stuff like this, okay? Here's a classic example why you never argue with price. There were people that bought that right here at 50, and it falls almost to 40, 10 points on 50. Folks, that's a 20% drop. Don't do that to yourself. That's why I love simple basis. This is not simple up here. It's loose. High investor emotions, be cautious with that. We're about done. URA, uranium, that's sloppy, leave it alone. Oil service, U.S. oil, really nothing happening there. Aerospace and defense is a bit sloppy here. Maybe it'll get a bounce off the 50-day. Kind of sloppy though, folks. Biotech spacing, this one doesn't look too bad. Check this out. It's down to the 50-day, right? Oh, look, this is just supporting on the 21-day. Oh, that might be a buy, taking out these tops on XBI. Also note, gap down, fell, closed right at its highs of the day on a pickup in volume. They supported it, folks. That's something to watch going forward. Now, this is a bounce setup. It's riskier. It's not a base breakout. It's less reliable. If you do buy it, if it triggers and you do buy it, just go smaller. Home builders, there ain't nothing happening there. Leave it alone. They're not buying it. They're not even renting it. Okay, I'm sorry. Got to say it. Materials, how do you build houses with materials? Nothing happening there. Leave it alone. Communications. Looks like Led Zeppelin, communications breakdown. There you go. Nothing happening there. Leave it alone. Energy. I like the base that's forming here on energy. And I'll show you right what I'm looking at here. It's a lower level base across here. Take that out. Take out these tops with volume on energy. But no, there's overhead supply here. A ton of overhead supply. That means it could be met with selling pressure as it proceeds up. How can we lessen risk? If you buy, just go a little smaller. There you go. XLF, financials, not much happening there, leave it alone. Industrials, not much happening there, leave it alone. Energy, pretty sloppy down here. It's got support off the 50-day, but it's kind of loose. Be a little cautious with energy. Consumer staples, stay away. There's nothing to do with it. This is why I do this at Mission Winners. It just narrows our focus down on what to look for the week. Stuff to stay away from. Utilities, getting a bounce here off the 50-day on a slight pickup in volume. Possibly looking at some utilities. More of a defensive group, though, isn't it? But it's also interest rate sensitive. There you go. Healthcare has clean tops across here. I'll draw this to help you. Close enough. Should be a little higher. Here, I'll clean this up a bit. Do this justice. Take out that line right there. This is healthcare. But it tells you something else. Not just that, oh, this ETF looks good. There may be opportunities in the healthcare sector. See that? That's pulling it all together. Consumer discretionary is awfully loose. Be careful with that. Metals and mining, stay away. I'm not being funny. I'm just laying it out. Look, there's no power there. Leave it alone. Oil, picking up a little bit, but it needs to get through the 50-day with volume. And there's a lot of overhead supply in here on the daily and the weekly. Don't be a little cautious there. Retailing, for sale. Leave it alone for right now. Software, pretty sloppy here, folks, on both the weekly and the daily. Be careful with software stocks.
When markets get rough, most traders start looking for reasons. The pros, they look for rules. This week's lesson is about staying disciplined when volatility rises, and it starts with one idea: respond, protect, and then proceed. We're not in the forecasting business. We're in the risk management business. When the indexes log their biggest pullback since spring and leadership begins to fray, the goal isn't to predict the next move. It's to respond to what price and volume are showing right now. If a breakout starts printing several week closes and then loses the 21-day exponential, the odds have changed. That's when you tighten risk, trim exposure, or step aside. Questions can wait. Protect the account first. The same mindset applies to earnings. Never carry full size into a known volatility event without a cushion. If you don't have a meaningful profit buffer, you're paying to hold risk you don't need. Even great reports can gap the wrong way, so ask, do I have enough room to absorb a normal post-earnings move? If not, scale back. If yes, hold a smaller piece and let the stock earn the right to stay. Next, focus on structure. When the right side of a base starts to widen and volatility expands, that's not the place for fresh entries. Tight patterns are what we want, because tight means calm sponsorship and conviction from big money. In corrective phases, start by watching the stocks that refuse to break. Those are often tomorrow's leaders. And a quick word about confirmation: one reversal bar doesn't make a buy. Before you press, you want to see the market reclaim its short-term downtrend line and flatten the 8-day exponential while building a higher low you can measure risk against. Until that happens, stay on defense. Consistency builds feel. Run the same screens the same way every day. Notice when the list shrinks, when it expands, and which themes start to firm up quietly while the crowd is distracted. That rhythm, responding to real signals, managing risk ahead of opinion, and doing the work is what keeps you in the game long enough to catch the next true trend. Now, let's shift the focus to leadership. If buyers are truly ready to come back, we'll see it first in the MAXLIST: tight patterns, rising volume, and strong support at the 50-day line. Here's Pat Walker with the latest MAXLIST analysis.
So let's go in and take a look at the big boys, the MAXLIST. Apple is owned down lower. It's been a great trend on the weekly. It's finding support right here on the daily. What would we like to see? This is the 8-period exponential, as I cited earlier. Get a bounce off this with volume. By the way, I've already set the price alerts on this. Okay, we own this down lower, by the way, so we're managing it to see what it does. Amazon, look what Amazon did on the daily chart. Bounces off the 8-period exponential moving average line. It gaps down, falls, reverses, and closes near the highs, bouncing off the 8 EMA. Institutions use that moving average, folks. I'll just tell you, they do. The 8-period exponential moving average, getting a bounce. Volume's about the same. I already have price alerts set. I'm going to drop it just a bit. It's not a stop, it's alert. If this takes out the highs of this bar, could be a potential buy. Let's move on. AMZU, same situation. Here, I'll show you something. This is a $240 stock. Okay, right? This is a $41 stock, $42 stocks. It allows you to get into Amazon for a cheaper price. And it's the same price chart type of movement. Look at this. See that? Reverses down, gaps up. Here's Amazon again. Look at that. Reverses down, gaps up the next bar. Falls. Same chart. Boom, boom, boom. So what am I pointing out here? This is a way to get involved with Amazon at a lower price by AMZU. Alibaba had a beautiful base breakout back here on the weekly. We bought this. We could buy at 130. 130 up to near 190. That's serious money, folks. All right. And here it is on the daily. We'll shrink this down a bit here so you can see this. Just going across these tops here, all across here. Note the volume pickup on that bar. It was just going sideways. I'm just kind of meandering sideways here. I'll draw a line for you to help you. It's simple tops, all right? A little bit of a breach above it right here, which coincides with this. And then, boom, it takes off on the weekly. And boom, look at the volume pickup on the daily. Again, folks, this is so important. Look for that volume confirmation. It's telling us other people see what we see and they're acting on it. We don't want to be the lone wolf like, oh, there's nobody else that sees it, but I'm going to go ahead and buy it. No, we lose the ego. We let the price and volume guide us. And here's where it is here. We have had a nice run up. It's basing again. Look at this. It's a little sloppy. Perhaps it'll settle down. Perhaps it'll get a bounce off the 50-day moving average line. By the way, you can't catch me in a lie. I already set the price alert on it. You see the little green hash mark? Drop it just a hair. We'll be ready. Now, this is a bounce setup, not a base breakout. It's less reliable. How would we control risk in this pattern? If you buy, start a little smaller. There we go. Baidu, same situation. Nice base going across here. There's a clean, there was a downward sloping trend line, and now we have a new line. Just connecting the highs. What's the high on this bar? 131.04. What's the high on this bar? 130.95. 9 cents difference between these two bars, folks. Takes out that top with volume, could be a buy. And again, notice I already have the price alert set. Google, simple base breakout on the weekly, way back here on the daily, support right here, another base breakout right here. This corresponds with the line right in here. Draw this to help. Again, I try to be very thorough in this analysis to help you. This is what we do at Mission Winners. Helps us make money. Better investing decisions, more money, and be safer. And it's just working. It's basing right here. This starts to lift off again. Guess what? We'll buy more. Starts to lose these lows. Maybe we'll sell a little bit. There we go. No day trading, by the way. Just looking at the charts. There's Goldman Sachs. Nice base here. I'll clean this line up for you. There you go. What do you want to see? Just take out this top here. Price alert is already set. Look, what catches your eyes on this chart? Show you something. We master each price bar, open, high, low, close. Look what Goldman Sachs did here. It gapped down, see a little hash mark to the left, gaps down, drops like a rock, and then reverses and closes near the highs on that bar on a slight pickup in volume. Folks, they bought that bar. You can say, how can you say that? Look at where it closed. Closed at the highs, right at the highs. Well, almost at the highs, give or take a couple of cents. You get my point, though. That's what you're looking for. Bouncing off the 50-day. Institutions use that. I just want to share that with you. So now we'll watch it, and we'll see what happens going forward. But what do we want to see? Take out this line. Take out these tops here on the daily, which corresponds right here on the weekly. And again, to help you, I'll draw this. There you go. Let's continue onwards. Mastercard. I mean, take a look at this space. Oh, that looks pretty simple and flat right there. That looks like nothing to me. You're exactly right. Don't overthink it. Don't dwell on it. Go to the next one. I mean, again, folks, we've got a limited amount of time. Why waste it noodling around with a bunch of stuff that's marginal? We don't do that. FBL, there's nothing there. It's in a downtrend. Leave it alone. Meta, nothing there. In a downtrend. Leave it alone. Microsoft, in a downtrend. Leave it alone. Netflix, there's no real power yet. This needs to show some strength. Until it does, leave it alone. By the way, it's below the falling 50-day. It's below the falling 21-day. You want to improve your investing results? Buy stocks above a rising 50-day. By the way, I used to teach this at the IBD meetups. This isn't just some off-the-top type of stuff, okay? Nvidia, lifted off. Ooh, that was nice. Sold in a strength. Boy, I'm glad we sold. That was, gave it all back and more. Now, buys down lower are still working, all right? But up here on this higher buy, we locked that in. Now we'll watch it and see. It bounced off the 50-day. The pattern's quite loose now, so we need to see it tighten up a bit. Same thing's true with NVDL. Tesla. Tesla starts to go. There it is on the weekly, and then he gives it right back. Don't argue with price. This is why I love simple bases. You see that line right there? I'll transpose that to the daily. Starts to go, and then gives it all right back. And we don't argue with price. What was one slight negative when it broke out here? Well, it broke out, Pat, and it didn't even do average daily volume. Not a lot of power. So nothing to do with it now. It's still basing. this may take off. It will be ready. TSL, this is 1.5 times Tesla. Same situation. You can see it's the same chart. Nothing really to do with it. Leave it alone. Visa, it ain't where you want. It's never where you want to be, right? Nope. Leave it alone for right now.
That wraps up today's episode. Huge thanks to Pat Walker for another deep dive and to all of you for tuning in. If you found this helpful, make sure to subscribe to Mission Winners on YouTube, check out missionwinners.com, and stay sharp out there. Master your strategy, trust the process, and maintain your edge.
The charts will rise, the charts will fall. Don't lose your head, don't risk it all. Every trade's another test. Keep your cool, trust your best. Stay safe out there, keep your line tight. Risk first, always do it right. You don't need luck, just do the math. Be smart, stay true, stay